All right, everybody, this is Vent Trader here. Just going to do a little tour on some of the stocks that have recently been discussed by one of our senior equity analysts, Robert Reed. We're going to be joined by him shortly here. Three of them have reported earnings that he did story stocks for. And also going to take a look ahead at that McDonald's report that's due out later today. So just waiting for him to log on here.
Sorry.
Nope. Hold on a second.
Okay, can you hear me now?
Yeah, I can hear you now.
Great.
All set over there?
Yeah, we're all good now.
All right. Busy earnings season so far, right, Robert?
It is. Yeah, it's really kicking off this week. The first thing I actually wanted to talk about just quickly is this Grubhub, which is actually a former emerging growth name, and the stock has just been a monster. We've written about it a number of times over the past couple of years. It's been in and out of our rankings. It actually got priced out of our rankings, I believe, because we have a $10 billion market cap, and now it has about a $12 billion market cap, so it got priced out from our emerging growth rankings. But it was a really impressive report this morning. So
what was it that stuck out about the report that you liked?
Just the huge. Well, it was a big EPS upside. I think it was around 9 cents of a beat. Their revenue was up 50% to about $240 million. And the thing I really like about it is that kind of stood out to me are just the adjusted EBITDA margins, which is kind of a good proxy for cash flow. And so they generate a lot of cash. I mean, they just posted 27% EBITDA margins this quarter. So I really like the company here. They're just a really good cash company, and they've been doing a lot of deals lately. Basically, they signed an agreement with Yelp last year and Groupon, and they actually bought Eat24 from Yelp. So they kind of joined forces with Yelp because Yelp was trying to get into the delivery business, and now with Grub sort of joining forces with them, they're sort of the 800-pound gorilla in the online ordering space. So I really like that about Grub's positioning. And they've also done recent deals. In February, they announced a deal with Yum Brands to deliver like KFC and Taco Bell orders. And in fact, Yum actually took a $200 million stake in Grub at the time. So that's a good sign. That's a good vote of confidence. And then in May, Grub announced a partnership with Jack in the Box to provide delivery for them. So they're kind of really building some scale with a lot of big name fast food restaurants for delivery. So it's a pretty exciting time for Grubhub.
So a lot of this money's being earmarked more for M&A growth and growth via M&A. Do you figure, Rob, or do they have any sort of capital return plan?
You know what? It's interesting you mentioned M&A because actually just today they announced they're going to acquire this company called Level Up, which is basically what they do is they operate like a mobile platform that makes it easy for companies like KFC and Taco Bell to integrate into the Grubhub marketplace. It's sort of like a technology platform. So Grubhub's really excited about what that can do going forward. But so anyway, but M&A is a big part of it. But I think it's just their huge positioning and their big cash flow is really what gets me interested in the stock.
So is this still on the emerging growth list?
It is not, unfortunately. We have a $10 billion cutoff, and it's a $12 billion market cap. So emerging growth is more for it's usually between about 200 million up to about 10 billion is our cutoff. We kind of want to get that small and mid cap feel for it, but Grubhub's starting to become a large cap stock now, so I'm unfortunately to get priced out. But I still like the story a lot. The stock's up big today. It's up 24%. I don't know if I'm going to buy it up here, but I do kind of like it in pullbacks. I kind of do like it as just a general idea. So.
Right, and just as a heads up, that's a 90 million float with a 10% short interest in Grub, so certainly a little bit of an aspect of a squeeze alongside this positive set of results. One quick question, or one quick break in here, Rob. Just going to note that Blue Chip Trader put out a swing along on SEDG.
Okay.
Rob, while I got you on here, might as well discuss it because I know this is one that you've written about a lot in the past. Obviously, they do those solar inverters, so always a nice little early tell for how the solar space is doing, since that's kind of ground zero for any sort of any sort of solar system or system that's being put into play here. So any thoughts on SEDG? I know you've written up a
guys,
lot
can I
on
jump in quick? I'm sorry, it's Blue Chip here.
Yeah.
So I have one question for Rob about Grubhub.
Sure.
What's the downside for something like Uber Eats getting into that market space? Like, how much? I mean, I know Grubhub has the main market share there, but are they concerned about these taxi cab kind of people stepping in and taking away?
Yeah, it definitely is an impact on it, but I think the market's just sufficiently large to have a bunch of players in it. It's sort of like Netflix keeps getting asked, oh, what about Hulu and what about Amazon video services? And basically their response is there's enough room for everyone to be in there. I think it's kind of the same way with Grubhub. Yeah, Uber Eats is definitely, a potential, big competitor there. Yeah. But they're not as integrated also as Grubhub. I mean, Grubhub is integrated all the way from like the menu down to the delivery, down to the drivers. Whereas Uber Eats is basically you want to order something from McDonald's, they come pick it up, drop it off. So it's a little bit. It's a little more just a standalone, whereas the Grubhub is kind of a more integrated
right. And is there a threat that this company is going to get Amazoned? Amazon's eventually going to be delivering their own food services for everyone.
I kind of see them as the Amazon right now. I mean, to be honest, I mean they're the big player in this space. I mean, they are the Amazon and Grubhub in the food online delivery space. So I don't really, Amazon could get into it, but I don't. It doesn't seem like it's not a big concern in my view.
Yeah, I'm just joking with you. All right, so I'm curious to know. Give me something good on this Solar Edge. I just got swing long, some of it right here around $56 based upon the chart. Mm-hmm. And I know First Solar's coming out with earnings tomorrow night. It just looks like a nice chart. It was I believe it was on the GROWX focus list over a year ago, or just up until recently. So give me something good here.
Yeah, what they do is actually they report next week, August 2nd. So. I'm not sure if I would buy it ahead of that, but I would kind of, just keep that in mind. They're going to come out with earnings. I do like Solar Edge longer term. What's nice about it is that it's kind of a technology play, whereas the First Solars of the world and a lot of these solar companies, a lot of them are commodity-based. Solar Edge actually has a protection. They have a technology that's patented. Basically, it allows each cell to be individually monitored, and it's a lot more. Basically, it's a lot more efficient than your typical solar PV panel, because each individual cell, like for example, in a lot of panels, if one light goes down or one is not performing very well, it affects a whole string of other lights.
It's like a Christmas tree light.
It's like a Christmas tree light, exactly. Yeah. Whereas Solar Edge figured out a way where if there is some sort of problem, it only impacts that particular cell. It doesn't affect the other cells. So it's a lot more.
They don't make modules, though.
They don't make the modules. I don't have it right in front of me, but they do have. They do have some sort of technology where it is built into the module. I think they might actually sell to module makers.
It's the inverter that controls the module that's being placed along to the energy storage.
Oh, right. Okay. Yeah. That's it. Yeah. But I mean, the point is that it's basically it's just defensible technology. So they're kind of they're not really as much of a commodity play as your typical solar play. So I do like it long term. I mean, I kind of want to see how their earnings look next week before saying too much about it. But
pretty low float here too, right? 43 million with 18% short interest in that name. Enphase is another competitor in that space too. So that's
What's
another
the ticker
name.
On Enphase again?
NPH. And a little overhang, just real quickly on Solar Edge, when they report, they always get questions every quarter about there's some sort of Chinese company that's going to come out with a competing product. Solar Edge's response is always, well, it's a lower quality thing. They're not really seeing it. Hopefully that's still the case in when they report Q2 results. But anyway, that's just sort of a cloud that's kind of been over Solar Edge that you just want to listen for if you're going to listen to the call.
Yeah, that's something that's always running in on that space. Take a look at American Semiconductor when it was trading about 35 and then fell to 7. It's kind of a similar play on the wind side. And they had a big deal with Veritas, a Chinese name that basically kind of just stole the technology from them and created it themselves. So I would assume that SEDG probably has a similar concern around it. And but I mean, pretty fairly valued here at 15 times forward PE in that SEDG too.
Yeah, and if my memory serves, I think their balance sheets are in good shape too. I'd have to look at it to be sure, but I don't have it in front of me. But
yeah, I mean their current ratio is at 3.6, so that's pretty good, right? So.
Yeah.
So yeah, I mean, a good-looking name, and their chart's probably looking a little bit better than the end phase one at the moment here.
The end phase has just been kind of chopping higher here. Let me take a look at that. ENPH, you said, right?
Yeah.
ENPH is just riding along that 50-day moving average. It's actually looking pretty solid as well. It's a cheaper name, though, so you know my style. A single-digit stock compared to a high $50 stock. I'm always going to say the quality, the market is smarter than me, and the quality is going to be in the higher-priced one. So I don't know anything about this end phase. But SEDG was a leading emerging growth name, so I know the growth potential is there. I know the fundamentals are there. And then I see it come back off 30% off its highs, and then start turning back up again. I'm on board.
All right. So Scott, you want to continue to join in with us, because Robert has three other names that he's going to look to discuss.
I wasn't invited. Sorry to invite myself.
No, you always invited, Scott, and I'm sure the users are happy to get a little bit of insight into that SEDG from Robert as well too. But Robert, one of the next names that you were discussing, and one that I know Scott and I have discussed in the past, is Boeing, ticker symbol BA, of course. Got hit on its earnings results. When you were going through doing the story stock on it, was there anything that stuck out to you?
No, actually, it really wasn't that bad of a quarter. I mean, they reported nice upside. I think the concern was that they did not guide higher for the year for EPS. They just reaffirmed their prior guidance, and I think people were a little bit spooked by that, because they did report an upside, but they didn't go guide up. Whereas they did in the first quarter, they did guide higher, and so they opted not to guide higher this time. So I think that might be just a little bit of a concern for investors. But I think the quarter was actually pretty good, just from a fundamental standpoint. I really didn't have see anything wrong with it, but but yeah, I think it was just more of a sentiment thing, where the just not guiding higher. And they did up revenue guidance for the full year a little bit.
But by $1 billion, right?
Yeah, which wasn't very much. Yeah,
did 97 to 99 billion from 96 to 98. Yeah, the way I was looking at it was that it was just towards the high end of the range, wasn't anything spectacular, and and like you said, that guidance being in line. Did they change their order guidance at all?
They bumped it up to, I think, 5,900. No, for their deliveries for commercial airplanes they reaffirmed full year guidance of 810 to 815. That did not change. And their backlog, that's what I was thinking of, was the 5,900 commercial aircraft. That did bump up slightly from, I think, 5,800 in Q1. So a little bit of a change there, but overall, it's a real good quarter. I mean, but I also think that people were expecting a good quarter, because actually Allegheny Technologies reported a really nice quarter.
Ticker symbol ATI, right?
ATI, yeah, I think on Monday. And they supply a lot of the metals, like the high-performance metals that go into jet engines. So they're a little bit of a barometer. Obviously, Boeing's a much larger company, but ATI is kind of a good barometer for a company like Boeing, as to, because obviously ATI is doing well, Boeing's going to be doing well because they purchase metals from ATI. So those two kind of go together. So I think people were kind of expecting. So this might be a little bit of a sell the news reaction too in Boeing.
Now, I know you had a busy morning. Were you on the call at all, or?
I was not on the call. No, I'm sorry.
Okay. Oh, no problem. I was just curious if they had any comments on rising costs, because you got to figure. I mean, what's their biggest cost of goods sold, do you think? Is it steel or?
Well, it wouldn't be steel. It'd be like titanium.
Titanium.
Like
okay.
The high performance alloys. The real. I used to get on a steel team at Citigroup back in the day, but they're obviously the biggest component prices probably would be just high performance metals like titanium, aluminum, that kind of thing.
But their margins were pretty good. You didn't see anything that was sticking out.
No,
expenses outpacing revenue growth or anything.
No,
right?
They didn't really. I mean, for the press release, I didn't really say much about. The margins. It was for the commercial aircraft segment. I think it was up, but another segment was down. It was kind of a mixed quarter on margins. So I think defense was down as well. I'm not sure. I don't have it in front of me, but I think that's kind of what. I think it's just the overall sentiment is just hitting it, and then people were kind of expecting a real good quarter from them based on ATI's report earlier this week.
All right, Scott, any thoughts on this chart here?
The chart's been real sloppy the last couple of months. This was an absolute stellar performance in 2017. Stock was up like 125%. It looks fantastic. I get a little nervous about the highest priced Dow components, though, after they maintain that leadership up there for a while, because it just becomes the most heavily weighted component in a lot of portfolios that are quasi-Dow. And to me, it's very difficult for those stocks to maintain that number one spot in the Dow. So a little bit nerve-wracking. I think it's more of a trading vehicle at these levels around here. I'd much rather be a buyer on weakness and sell into strength rather than look at it as a longer-term investment play.
All right. Next up, we're going to move, Robert, to VCOR, ticker symbol VICR, another GROWX name. And to be clear, Robert, you're not an electrical engineer. Is that what I'm saying?
That's exactly right. So don't make me explain exactly what they do, but...
Well, how about giving a broad overview to the people of their basic business there so people understand?
Sure. What they do is they make what are called like modular power components. So for like high performance, high power segments, like data centers use their products, or aerospace and defense, very like intensive sectors that need a lot of power. So basically they make a lot of the components that go into systems that power these places like data centers and other places. So what's exciting about it is basically there's this transition, and again, that's not really, I know, I'm not an engineer, but there's basically this thing called XPUs, which is made up of CPUs, GPUs, and ASICs, which are different kinds of electrical components. There's a huge shift in this market going from the legacy 12 volt to 48 volt. And basically Vicor is a play on that. Because they make the 48 volt components. So they've just been bumping up their bookings every single quarter for the past year. The bookings were up like 47% when they reported Q2 results this morning. So basically they've improved sequentially each of the past 4 quarters in terms of bookings. So there's just a ton of demand right now. And another thing is that these are much higher margin products, the 48 volt ones. So as that becomes a larger part of their sales, that's really going to have a big impact on margins and EPS. Like their EPS in Q2 jumped to 19 cents from a penny loss last year, and from 10 cents in Q1. So you can see sort of the operating earnings leverage, as the sales keep increasing and as these high performance portion of their sales keep increasing with the 48 volt, it's having a big impact on earnings. So but anyway, I just wanted to...
Well, I would say that's pretty evident. I'll post the chart here in a second, but if you look at their last 3 earnings reports, just a massive spike in volume and just the pop in the stock, too, which was at $18 back about three earnings reports ago and just been on a steady rise.
It has. Yeah, actually, we added it to our GROWX rankings April 9th at 2755. So it's up like 125% since then. So it's been a really nice mover in our rankings. But that's what's kind of good about our rank, is it kind of looks for companies with good earnings potential and names like this where I never heard of it until I started digging into it once I hit our rankings. And it's a pretty interesting story that I don't think a lot of people, I don't think there's any analyst coverage on the sell side. So there's I don't think the story is very well known, but it's definitely, there's some good potential out there.
All right, just so people are aware exactly of what you're talking about with rankings and stuff, for anybody on our home page, if you look up at the top under that investing and trading area and under fundamentals, emerging growth stocks is one of the first drop-down menus that you can collect in. Robert and Dennis writes up a lot of these too, right, Robert?
Yes, that's true, yes.
They do a phenomenal job of putting some stories behind the numbers of the scans that we get here. But Robert, maybe just give a little bit of a plug for this emerging growth stocks in terms of how you guys come about the names, what's the focus of the list, and how you go about kind of picking out some of the ones that you do, because you guys come up with a lot of great trading ideas based off of this. So I think that'd be helpful for the subs just to get a little bit of color on that.
Yeah, sure. Basically, so it's a proprietary scan where we scan a bunch of different things. We look at earnings growth, sales growth. We have certain minimums in terms of market cap, average volume. We don't want really thin stocks in here, so so that has an impact on our margins. Relative strength is also an aspect here. So we look for margins that are increasing. So it's kind of a number of different things altogether. And so what we do is we put out the scan every Monday. We run the scan, and then if a stock's in the top 25, we basically start tracking it, and then as long as it stays in the top 100 even after that, so it might hit our rankings, let's say 67, 62, 55, and then 19. Okay, now we start tracking it once it gets in the top 25, and then it can float anywhere in the top 100, and we'll keep tracking it. But if it falls to like 105, then we delete it. So that's kind of how the ranking system works. So, but it's not like a actual portfolio of stocks, but we basically start tracking it and then deleting it at certain different times. But it's a good idea generator for people looking for. These are more swing, longer term investment ideas that I think that would be attractive to people. And as long as we're actually here, I just wanted to mention that I do like this InSteel, which was one we added this week.
Was it ININ?
It's IIIN, and they're the largest steel wire manufacturer in the U.S. So
broke out
basically,
above 35 on earnings late last week, right?
Yes, correct.
Okay.
Yeah, but I like it quite a bit. There's basically they make the wire mesh that goes into like concrete products for roads, for bridges, so they're basically high, correlation to construction, and the construction market's just been really strong. If I follow the other steel stocks, and Nucor and Steel Dynamics were saying that this past week that the non-residential construction center is really strong. So InSteel is kind of a play on that.
Any impact from the tariffs?
Yes, actually they do. They get hurt by it because they buy wire rod and then they convert it further to make their products. So they do get hurt on the cost side.
Or do they import it from Canada, or?
Well, it's not even so much they import it. It's because there's fewer imports that affects all prices. So even wire rod made in the U.S., the price is going to go up because there's because the imports have declined. So it just affects the whole market. So even if they're not even if they're buying from a U.S. manufacturer, steel prices have gone up quite a bit since the tariffs were announced, because it's preventing a lot of imported steel from kind of flooding the market, and so you lose all that supply, and then the whole market's going to get more expensive. So they do concede that they've been hit on that side, but the demand side is really strong too, and it kind of sounds like they're able to pass off a lot of the increasing prices to their customers. So it doesn't sound like they're really being impacted too much, at least right in the near term. But I do like it as a stock overall.
Okay, great. And then I guess the last name that we'll discuss here is one that you just posted an earnings preview for. Popular name, of course, everybody will know. McDonald's, ticker symbol MCD. Chart's looking a little shaky here. Scott, I don't know if you want to adjust the chart real quick before we have Robert break in on the fundamental side, but I'm just looking at trying to hold this 156 area.
Yeah, year to date, the stock has just been a mess. I don't know what else to say. I mean, buy low, sell high. It's sell high, buy low. It's that classic. If it goes down, everybody hates it. That's when you want to step in and buy it. And if you hear good news and they're all buying it up, start shorting it, start selling it to strength. Just a real chop fest going on here year to date.
It's actually. Go ahead.
I was just going to say that's your cue, Robert, then. So, I mean, looking ahead at the fundamentals in this quarter, what's sticking out to you on this? And I'll stick away from the cheese ball. You love it questions.
Yes, I do. I eat there too often, I must admit.
But what should people be looking for in this report?
I think the biggest thing is, the stock that was sold it off in Q4 was the management actually said that 2018 is going to be a choppy year. They usually they're usually not that candid in terms of what they, saying comments like that, and that just hit the stock in late January, early February, and the stock hasn't really recovered. I mean, it kind of has been choppy since then, which is kind of funny.
Yeah, very prescient.
Exactly. So, it'll be interesting to see what they do. I think one of the big things are going to be this, there were these foodborne illnesses and these salads in Iowa and Illinois. Just even though it might have only affected 2 states, and they said that they've resupplied everything, I heard the exact same thing from Chipotle a couple years ago when they had their foodborne illnesses, and that had a profound effect on that stock for a long time. So I think people are just a little bit scared. They want to make sure that the salad thing is not going to be a recurring problem. And
it never got hit the same way as a Chipotle.
No, it hasn't, but Chipotle didn't get hit because Chipotle made it seem like a very narrow part, and then all of a sudden in Boston it happened, and then the Northwest, and then it just hit different parts. So I think people are just a little skittish. I'm not saying that's going to happen with McDonald's, and it is a salad as opposed to...
exactly. Chipotle sells one thing. They sell burritos. That's it.
I'm just kind of laughing at anybody that's going to McDonald's for a salad. I'm just
exactly. It's like
yeah, that's true. That's true.
Yeah.
So anyway, I think just some clarification, just because these things just happened during the quarter. So does it have any impact on Q2 or the outlook, or just sort of any sort of just customer sentiment, if that's going to just scare people from eating there? I don't know. I don't think it's going to have the impact it had on Chipotle, but I think people are just really skittish right now about that. So. So that's to me that's the big thing. It's just and also the comps are always really important.
Which is the most important comp, do you think, Robert, at this juncture? Because you got your system-wide comps, you got your U.S., your international. They got a high growth and a foundational corp comp. Is there anyone that's sticking out? I've been seeing a lot about their international growth being a key driver and stuff. But is there anyone that you'd be looking at as the primary comp to take a look at?
I definitely think the high growth segment would be really important, because that's sort of the emerging markets like China, Malaysia, areas where they don't have too many restaurants, where they see a lot of expansion potential. So you want to just see if they can keep penetrating those markets. So to me, that would be important. Also, of course, the U.S. is obviously important. That's obviously their biggest market. So the comps there, I think they were 2.9% in the first quarter. So hopefully they can be pretty decent in the second quarter, but we'll see.
Expectations for U.S. comps are about 3%.
Okay.
The Q2 system-wide comp expectations are around 3.6% for those keeping track at home. International is expected to grow about 4%, and then that high growth market that Robert was just talking about, the estimate for that's running around 2.5%. Okay. There's some of the comp numbers that you're going to want to be looking at for McDonald's. So
roughly flat-ish from Q1, so we'll see.
Yeah, it pretty much seems like that'll be enough to get it done, right, Robert?
Yeah, we'll see. So
basically people are just looking to make sure that there's not any digression going on in McDonald's, looking for it just to remain flat, not have a downward chop.
Yeah, I think it's. I was looking at the Q1 comps as you were reading those. Those are pretty comparable to what they did in Q1. So I think that's what the investors are looking for in Q2, and hopefully it'll be a pretty good report. But we'll see. And you also just want to keep an eye on other, chains. Obviously, Sonic, Wendy's.
Well, Wendy's is your favorite, right? Do you still own that? Do you like that one?
It is. Let me pull up the chart here.
You've been talking about Wendy's for like 3 years as a turnaround.
I know.
Well, and you've nailed it. Yeah. So
it's had some disappointing times for sure.
I think their salads are better.
Everyone going to Wendy's for the salads, right?
Actually, their 4 for $4 is super popular. I think the other ones are trying to emulate it. That's because McDonald's came out with that 1, 2, 3 menu. That's a total ripoff of Wendy's. Wendy's had that 4 for $4, which was just stealing market share from McDonald's.
I know my kids love going in there and just ordering the Baconator. They just think it's the coolest name ever for a sandwich.
Can you put that in a mouth? Is that the one with the?
Yeah, my son can. Okay. But my daughters, they just love saying that, the Baconator. Pretty cool name.
I might have a heart attack by you.
Do you still like Wendy's up here at this level?
I do.
Valuation-wise?
Yeah. They like it. They're basically transitioning from a company-owned operation to a franchise operation, which is, I think it's a lot better that way. It's fewer capital costs, much higher margin sales, and less risk. So I think it's definitely a good thing. I think long term, I think it's in good shape, but it is a choppy stack that goes up and down. But I think the long term direction looks positive.
Cool.
Hey, Robert, not to put you on the spot here, somebody had requested any commentary on Kemet Corp, KEM, which I know it was a stock that you highlighted back on July 10th. They reported earnings earlier today with an 8-cent beat. They beat on revs, and they raised their FY19 guidance. So, pretty positive results, and I'm guessing what has the sub scratching their head is probably the reaction, but thinking more than anything, it's probably that rally above the 200 following last quarter's earnings, and just definitely seeing a common thread of them selling off post earnings and holding that 200-day moving average. But not sure if you had a chance to take a look at this, but you got any thoughts on KEM right here?
I haven't looked at this report that closely, but the stock's only down about 2% on this. I'm kind of thinking of it as looking as a non-event. It's kind of my quick take on it.
Seen a nice bounce back for sure.
Yeah, I mean, it did fall. I guess it was earlier this week, but I like the story here. I mean, they're basically just trying to keep up with demand. They're expanding their
and just
capacity.
to follow up, they make capacitors, right? Basically electronic components that store, filter, and regulate electrical energy and current flow.
That's exactly. Basically,
I didn't read that off the top of my head. That's from your July 10 comment.
Yeah, exactly. No, that's totally fine. So basically, like as cell phones get more complex, I think they were saying like the iPhone 10 has like 2 or 3 times the number of capacitors that the iPhone 7 had. So, and then also like electric cars, they go from like 2,500 to about 12,500 in terms of the capacitors needed for electric cars. So basically, as electronics get more sophisticated, they need more and more capacitors. So this company is just huge into the space, and they just they're trying to increase production by about 25%, and they said they're already approaching full capacity in many of their product segments. So, there's definitely a degree of cyclicality here, but it's just basically they're just trying to keep up with demand. And then actually, PE was actually pretty cheap. It's trading around 15 times, which is pretty reasonable. So I think that the valuation here looks still pretty good, even though the stock has moved a little bit. But
it's down at about 13.7 times forward.
Oh, is it now?
At this point, yeah. Price sales only about 1.37.
Yeah.
For those interested, it's only a 52 million share float, about only 4% of that short interest, so not really a squeeze candidate per se. But definitely a cheap name here, even with that rally.
Yeah, I agree, and I think a lot of people don't really follow it. I think there's not very much analyst coverage, I don't believe. So,
and just to jump in here with the emerging growth focus list, in my experience of watching this, I think it's been almost 10 years we've had this out there for already. They've already done the hard work for you on the fundamental side, from the screening side, from finding the best names. A lot of times when these names when they make the top 50 list, people look at the chart and say, there's no way I'm buying this because the stock has already ran 30, 40, 50% over the last 6 months or so. And they basically say, I'm just not going to pay attention to this. This is stupid. This is overbought. And what happens is, and I've seen this on so many occasions on these emerging growth names, is you can just apply the basic technical skills of an RSI, a MACD, or stochastics, buy these stocks on dips as long as they continue to maintain their multi-month, multi-week uptrends, usually above the rising 50-day moving average. And you can really just swing trade these things and time these things almost perfectly. Obviously, if they start selling off on heavy volume and crashing through 50-day moving averages, you want to step aside. And then to add on to that, too, I've also seen, and Rob, maybe you can be a better verification of this, I've seen so many of these names get taken out and bought out by other companies.
That is true. Yeah, quite a few of them have been.
Yeah, they're all small to mid-cap names that just seem to constantly get merged and bought out.
Yeah. I mean, that's not a metric we look for, or you can't really scan for
predict
that.
It.
It's hard to predict that, but it just anecdotally, that does happen quite a bit with a lot of these names. So But I think it's just I think a lot of the acquiring companies, they're seeing what we're seeing. I mean, they're seeing good growth, margins expanding, usually in a good market. Just a lot of the characteristics that I think a bigger company would like to own. And I mean, a lot of them have moved, but yeah, definitely on pullbacks are better. But a lot of times they just keep moving. I mean, that's the funny thing. It's because, the sales and the margins are, everything, the fundamentals are there. So, just anecdotally, they do perform pretty well in general.
It is a tough thing to time some of them. Like I'm looking at this Tech Target, which is TTGT. It's been on the radar, I think, on your emerging growth list since February. And to be honest with you, it hasn't really pulled back at all. It has never really corrected more than 5 to 10% on any given week. It just continues to grind higher. So,
that's the thing is, like, I'll bet people in February were like, oh, this stock has run, it's gone from 10 to 16. Well, that's true, but now it's at 32. I mean, I'm not saying that's going to happen with every stock. Obviously, there are losers also, but don't just completely write it off because it has moved. I mean, just kind of factor that in and maybe buy on dips, that kind of thing. So
yeah, exactly. All right, cool.
So,
all right, well, Robert, I think that'll clear us up here then. Anything you want to add?
No, I think we're good today. Thanks
All right, well, thanks for coming on. We definitely got to make this a little bit more regular occurrence because I know people certainly appreciate your in-depth knowledge on the fundamental side of some of these names, and just the fact that GrowX does such a great job at unearthing some real potential winners out there. So we'll certainly look to try to have you on a little bit more and a little follow-up with some of these earnings that you guys are following over there on your side. But thanks for joining us today, Robert. For anybody listening today, we did record this session and we will be posting it to the site, so you will be able to re-listen and hear all the nice nuggets that Robert was able to throw out on some of these interesting names that are ones that you want to have on your radar.
Great, thanks so much.
Okay, talk to everybody soon. Bye-bye.